Let's take a look at Link, another one of my high conviction short plays, because this zone here, that basically like when Link was carving out the bear market trough from last bear market, it created this really interesting channel right here between, let's say, $4.50 and $9.50. And Link is breaking back into that channel. So if Link really breaks sharply into that channel, I think that it probably moves all the way down to the bottom of the channel. So maybe you could say to yourself, hey, a move down to $4.70 or maybe $5.50. But again, you don't need to use leverage to trade this, because if it gets down to 550, that's a 40% move. You don't need leverage to be able to make serious money off of a 40% move. And it can happen so quickly. Now, one of my highest conviction short plays is XRP, because this, in my book, is a do nothing meme coin. And I really think that this level at 126 is not going to hold. I think that XRP makes its way over the next several weeks, several months, down to 60 cents, something like that, all the way down here. So I am short XRP, and maybe I'm talking my book here a little bit because I wanted to show SUI, Link, XRP, and Sol. Those are my four highest conviction short plays. But if I had to pick just two of them, it would be Solana and it would be XRP. Those are my two highest conviction short plays. You know, Bitcoin and ETH, I think that they move lower also. It's just that the percentage amount I expect to be much smaller. So out of BTC down to support, I think that's another 20%. And so you could maybe start to think about buying some BTC down here at like 60K, something like that. For Ethereum, I think you could start to think about buying ETH at 1600. That would be long-term support. And from the current spot price, that would be roughly 30%. Nothing even close to what I expect out of Solana. And I think Solana could really just give up the ghost and move to the downside by maybe 70%, 60, 65, 70%, something like that. That's what I see over here in markets. Now, the dollar is a bit of a wild card here. Everyone thinks that the dollar is going to continue to weaken, but what happens if it doesn't? What if rates, especially long end rates, actually move a little bit higher and the dollar gets back up above support convincingly? I think that would probably be pretty bearish for digital assets if it isn't already, and also bearish for equities markets. So it'll be interesting to see what the dollar does. Look, you could make an argument that it will continue to weaken. There's a great argument for that. You could also make the argument that if rates push higher, and if rates break out, I'm looking at the 10-year here, if rates break out above 4.30%, they could move sharply higher, maybe with a first stop at 4.48%. I think that would be bullish for the dollar. And if you take a look at the euro, just real quick, now that we're looking at the euro put in this false breakout. So if the euro weakens and tests support down here at $1.15, that would likely mean that the dollar strengthens and gets back up above its own respective level of support. So it's not clear what the dollar is going to do, but if we take a look at the yen just real quick, and then I want to move on over and take a look at Euler, unless you guys want to hop in, have any questions, anything like that. We take a look at the yen here. There was that intervention like 2 weeks ago, and it seems as though, look, no one single market participant is greater than the entire market itself. So it looks like structurally, the yen must continue to weaken. So for me, I would be, interested to get short yen above 162 on a move to 200. But it hasn't, the entry hasn't triggered yet. So I'm sitting on the sidelines and I am going to patiently wait. But I want to pause here for just a second, and I want to pause on the VIX. And if anyone has any comments or questions or wants to take a look at anything in particular, I'd love to do that before we hop into the content in the community. And gold up at 5,000 again, silver at 85. It's been a wild ride. I can't trade silver just because it looks too much like a meme coin to me. It's so hard to trade a parabola like this. But my goodness, what a move. What a move. All righty. Let's
Let's
go
hit
ahead. Yeah,
the saber rattling in the Gulf is reignited again. So like it's a crucial week by Friday. If there's no meeting, they must like. I mean, there was some confrontation today between a drone attacking a U.S. ship that the F-35 shot it down. The Nasdaq software, Microsoft, IBM, all these guys are really tanking and it's accelerating. I don't know like it's the AI is finally like the talk about was the technology that was disrupting things, they're getting disrupted themselves. And I didn't get the two stocks in London Stock Exchange that softwares like they do service. They tanked big time. I tried to dig them up, but it's really nasty on that side. So you had like the government shutdown. It's been resolved
resolved, right?
for 2 weeks, and you have the Iranian U.S. showdown. Like almost looks like it's getting resolved like by the end of the week. We don't know yet, but it's to be confirmed. And finally, you got the Nasdaq, especially the technology software stocks like from Microsoft, IBM, Oracle, and all these guys did. The only surprise that I'm seeing, like after hours today, Google is up almost 1%, 343 ahead of earnings. But AMD reported today after the close, and it's blow up numbers. Like, I mean, they beat on everything, but the stock dropped. Like the last time I looked at it, it was down about 5% after hours.
Yeah, it looks like it's gapping down, Ramsey, after hours. So, that doesn't bode well for Google tomorrow and Amazon on Thursday. So we get Google after the close tomorrow. If AMD is gapping lower on phenomenal results, well, then maybe it's just time for a correction. Maybe we're just overdue for a 10 or 15 point correction out of the NASDAQ. It could be as simple as that. Maybe we don't need to overthink it. Google has been doing nothing but ripping higher. And hey, you know what? If Google breaks this support after they report tomorrow evening, that probably brings the market down with it. And then we would get Amazon on Thursday, and Amazon, just kind of treading water up here near its all-time highs. But its respective level of support would be something like this, right here. So, yeah, when you were mentioning software, Ramsey, I couldn't help but think of private credit because a lot of these private credit firms are in some way exposed to software companies. I'm not quite sure exactly how, but they have just been getting shellacked. And so the names here are important to just familiarize yourself with because the divergence in performance from like the S&P and these private credit names, they used to be very tightly positively correlated, but they've started to diverge. And that divergence actually began 9 months ago, maybe a little bit longer than that. And so take a look at these names. Blackstone Secured Lending Fund, Ares Capital Corp, Blue Owl Capital Inc., Blue Owl Capital Corp., and Sixth Street Specialty Lending Inc. So these guys are exposed to all that non-profitable software and that software that's being disrupted, and they are getting just shellacked. And that could be another reason why markets are basically just hanging on by a thread here. If we take a look at the S&P and throw down that 100-day, this 100-day has been an important level of support for all of these rallies. You break the 100-day and you start to get the correction. Markets have been tracking their 100-day moving averages on the way up. I think that if there's a convincing break with continuation of the 100-day, that would start the correction. And so then you could expect maybe 10 points out of the S&P on the downside. Maybe if we're lucky, we get something like that. But what does that mean for Bitcoin, ETH, Sol? It means that the crash continues for digital assets. So just something to think about. But hey, there's no guarantee, right? This could definitely bounce and we could just push and break out to fresh all-time highs. There are reasons to think that we would do that too. If you take a look at volatility, really not much by way of volatility here. But the more interesting volatility metric that I watch daily is the MOVE index.